Good.
Hey, welcome guys, welcome. I had to go live today. I'm going to bring on a special guest here in a minute, but I wanted to talk about some stocks that are absolutely popping off. I want to explain why. And the most important stock I want to cover with you guys is SoundHound. But we're going to take a look at some old meme stocks, GME, and AMC. I'm going to bring in a special guest and I'm going to give you guys exactly what I think will happen with SoundHound here very, very soon. I'm going to give you a fresh technical for those who've been following along that play with the stocks with Josh Page. Now, let me bring on my special guest, Mr. Stock Up with Larry Jones.
You can call me Roaring Kitty with a suntan.
Larry, tell people a little bit. Some folks might not even know who Roaring Kitty is, and a little bit of the back history and what's going on with GME today and why did it pop off?
Sure. So GME is one of those stocks that ran in 2021. I feel like an idiot with this thing on now. So, I actually did a movie, and Josh came in a town for it called Dumb Money, right? Now, this shirt says Dumb Money Woke, for those of you that remember 2021, right? And so this was a short squeeze, and the retail investors got together because GameStop, the GameStop that you used to rent your gaming from, was going out of business, right? They were beat down. You had companies like Melvin Capital that were shorting these companies. And the community got together, Wall Street Bets, Reddit subgroup Wall Street Bets. There's a group that got together and forced this back up, causing a short squeeze. Let's continue to buy and hold, causing a short squeeze. This happened with AMC, and it also happened with GameStop. It happened with GameStop twice. Now, I have something that I want to share with you. I got to take this thing off, Josh. I feel like an idiot. So I got something that I want to share with you when we get to the technicals, because if you short these too quick, you could wind up like Melvin Capital. And I have some windows pulled up here about how many billions of dollars. Melvin Capital lost over $5 billion by trying to short this stock out. And then you had companies like Citadel, Josh, that came in to bail out Melvin Capital, and Citadel lost over $2 billion, right, by trying to bail out Melvin Capital. Just put your head around that. That goes to show you that we need to stick together as a community. So now here's what happened, Josh. Roaring Kitty was a guy just like us on social media that started this whole GameStop movement. He started doing technicals and all of that, which he was breaking the SEC rules because he worked for an investor. Josh, all he did was put this out, and that's it. That's all he did was put that out over the weekend. And that is causing all of this run up.
Well, and
I don't know,
Larry,
if you can pull me up. Go ahead.
Well, yeah, let me just jump in and explain something to people. There's a couple reasons why we're talking about this today. One, it's not to hype up and tell you to, go long on these meme stocks, right? I want to use this as an opportunity to explain why did it jump off of him posting a meme? And then why did he post the meme? It's the exact same reason that he originally took his position, was that he believed that the shorting had become predatory and was actually pushing and driving the stock down. And the same thing that was being done to GME, people said, hey, that same thing's being done to AMC. And so they got a big short squeeze with GME, and there was the hope that it would follow suit with AMC. Now, it did get an initial short squeeze, but Wall Street quickly figured out how to combat it, how to reorganize, how to betray the retail buyers and actually manipulate the retail buyers. And then they went on. They went on the longest profit streak on any stock in recent days. Wall Street did by basically recycling that hype and trapping a ton of retail investors. Now, If you want to trade these, all right, I'm not going to come out and tell you not to. I'm not. I'm just going to tell you that the majority of winners will be those who trade them intraday, and they're entirely out at
Yes.
the end of the day. So
So
that's the only caveat I'm going to throw in at the beginning, because I am going to give you technicals on these, and Larry's going to give you some of his view on the momentum. But I just want to remind you, the biggest winners are those who are going to play the intraday moves. Go ahead, Larry.
to your point, Josh, the ones that are winning are the pro traders, number ones, the ones that knew about this over the weekend, and the pro traders with 0-day expirations on their options. Those are the number one traders, Josh, that are buying in the options chain. Most of the options today have a zero time, right? It's today, it's right now. So
Yep.
they are in and out. And so you have to be careful with you cannot be a novice and getting into this play. I'm telling you, if you chase it, you're going to get wrecked. I will say that you might get wrecked. I'm gonna take a note from Josh's playbook and say, I'm not going to tell you not to buy, and I'm not going to tell you to buy, but I will tell you that it's dangerous. That's all I'm going to say. By chasing after a day. Now, Josh, I got something that I do want to show them
Yeah, let's figure
in
out.
the charts. What's that?
Let's figure out how to do that. Oh, as far as sharing your
Okay.
you
So how about if I do
yep,
that?
I can see that,
So,
Larry.
okay. So I'm gonna move it over a little bit because this is very important for people to see what happened last time. If I can get this to it. Oh, let's see here. I don't know why I have to do that. Okay. So now what I'm gonna do, we'll talk about those guys, those handsome guys later. Where is it? There we go. All right. So Josh, I'm gonna move this over. Oh, there you go. Wow, it's doing a double take thing here. Yeah, put yours back full screen. That's messing with my eyes. Thank you. This is enough. This is enough. So let's just move that over. So here's what happened last cycle, Josh, in 2021, right? So GameStop moved up. GameStop was actually a $4 stock when this first thing took off. It was like around $4. Then it jumped up. You had a big green candle here, right? Wednesday the 13th. We had a huge candle. So it went from $4 range, jumped up, Josh, to like the 950 range, right? And I'm just saying that, I'm just calling it rounded numbers. Okay. So these are not exacts. So to go from $4 to 950, you already killed it, right?
Yep.
Then the next day we had another huge candle. It doubled from there and went to $16. I remember this like it was yesterday, because I actually got in not right here. So here's what happened, Josh. It ran all the way up to $120 by the 28th, Thursday the 28th. This is all in 2021. So we go from a $4 stock, a $4.50 stock, all the way to $120 stock.
Well,
Josh.
and
Yep.
the kitty dude made millions of dollars.
Millions. Okay, so here's what happened right behind that, Josh. All right, so now this is Thursday the 28th, 2021, right? And you know, Josh, some people bought right here, right?
Yep.
This is an idea. This is exactly what's called dumb money. This is what's called dumb money. It fell all the way back down to $10, $10.50. It literally came all the way back down, Josh, right? You and I know somebody bought it up here and then they sold it down here, right? That's the definition of dumb money, right? So they bought it at the top and they sold it at the bottom. Oh, it was over, right? Everybody thought it was over. Oh, what a grab, blah, 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 blah. And then it ran back up again from $10.50 all the way back up to like $87 again. This is why it's dangerous to even short it at this point. All right. So I wanted to be clear. It's dangerous to even short it at this right now, unless, well, should I say, until Josh shows us these technicals. But let me finish. So, so then it came all the way back down. And then what happened after here? There was a slow bleed off all the way right back down to this range. So that's what I wanted to show the good people, Josh. You could take it from here, and
Yeah.
I'll just get back in.
Well, no, that's perfect. I'm going to now. I want everyone to understand what's going on today. Larry and I were talking. I was working on a video about Palantir, to be honest, and he's like, "Dude, we gotta talk about this." And so I have not even pulled up the GME chart, but I'm gonna take you in. This is always when you see my face. Class is in session with the charts. It's an opportunity to learn. It's an opportunity to make money. So I'm going to take you guys into the charts. I'm literally pulling it up green and fresh, and we're going to look at what might happen with GME. Okay, so I've got the GME chart up. You can see the action that Larry's talking about. Now, first of all, I got to just say, wow, look at that move. Came all the way down to $10 and then bam, rocket ship up to 40. Come on. If you had gotten any piece of that, you got to be pretty excited. All right, let's just start here. Let's flip the 1 day to the 1 month. Why do I want to do that? I want to start looking at structural support, guys. Literally, this is like a class. We're going to do it together. This gives you a very long view of this company. Now, the very first thing I see right here is that $10 had played a significant role, really 14 and 10, okay, had played a significant role in the history of GME well before this event ever occurred. So you see that back here, it was structural resistance, support, broke down, same here. And so the fact that it took off when it broke through that, and the fact that it spent all this time coming back to it and used it as a launch pad is not actually terribly surprising. I'm going to tell you that I see two price points here. I see that the $15 mark and the $10 mark are both an interesting zone. Now we're going closer to the time frame that we're in, okay? And we can see that that $15 mark also was an area that had been respected in the past. When it came into this zone between 10 and 15, it got bought back up. It came back, it hit this zone at 15, it went back up. Larry knows this. I talk about it on my page all the time. Ascending channels, break into the downside, 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 break into the downside. Now, here's what's interesting. Now, this candle going above 15 and above 23 is a change of character. Now, if it had stopped at $24, which was previous structural resistance, right? If this had stopped here, well, then we actually would have a continuation move to the downside. But what now? So I'm talking this out as I see it, guys. So I started off saying I'm pretty bearish, but I want to respect what I'm seeing that is bullish. Okay. The fact is, we had a structural break of previous resistance, and we're above it. Now, here's what'll be interesting. This is the monthly candle right now. It means nothing until this month ends. So in 15 more days, this green candle with a nice little body could literally look like this red candle, and it could sell all the way back down beneath $15. And then it would not be a structural break. Does that make sense, Larry?
It does.
All right. Now, if we actually finish the month above this $24 level, then technically that would suggest that this crazy run-up actually has some legs. And so, yeah, at the moment, this is just intraday legs that's getting people stoked and excited. Now, you can see that there's a couple areas where this thing ended. This is an area of structural resistance right here, okay? Here and here. This is an entirely structural resistance zone. It came up, it touched the bottom, and it kind of fell back through. And now we are between these levels. We're between this level of 24 and 40, okay? Now, my gut tells me that this likely would close the month back beneath 24, and that would suggest a slow bleed. But if for some crazy reason this started the next month above 24, then I would suggest that it could actually go all the way up to 50. I've got no indication of that. This giant green candle month, you can see that for the entire 30 days that GME was running when it had that breakout moment, you guys can see that it ran hard for an entire month. It did ultimately give a shamelessly bearish candle. What makes it that is this giant wick of resistance at the top, and that caused this massive price vacillation back to $10. So I think the story is kind of young. It made sense that we came up to this structural resistance. I have a feeling we'll bleed back off beneath 24. And this was an incredible intraday move. And I personally wouldn't say that I would see the reason it would go higher. I'll leave this with you guys. If we close, or if we open and close above 40 over the course of the next couple days, then I would say this crazy GME move has got some legs to it. If we fail to open and close above 40 over the next couple days, then I would say that that was the move and it was just a flash in the pan. What are your thoughts, Larry?
So Josh, I 100% agree with you, because if you see here, just like you showed in your chart, there was a bleed off, and I believe it's gonna follow suit. I believe that, remember, just like before, it ran up, and every time this happened, and the same thing happened with not as much, but similar to AMC, Josh, just like you said, right back up, right? But then it could stay up. Now look, this is on the daily, Josh. So we had all of these days where it stayed up. Look at that. This is, somebody has a calculator. When it first ran up, Thursday the 26th, by the Wednesday the 9th of June. So from Thursday the 26th of January to Wednesday the 9th of June, we're still up, Josh. That's a long time, right?
Yeah.
And so what happened after that? Just like you were showing, slow bleed, slow bleed, slow bleed, slow bleed. And in this slow bleed, you had a lot of people, Josh, that were saying, oh, it's not over, it's gonna run again. It's not over, it's gonna run again. What did it bleed right back down to? Right back to where it started. Look at this. It literally bled right back down to where it started, right? And so that's what I wanted to point out. So I figured the two of us, Wonder Twins activate, if we put our heads together. Josh old enough to remember that. So guys, I just called Josh. I was like, Josh, you see what's going on? He's like, what? I said, let's see if we can, try to put our heads together and make the people some money. He was like, all right, let's go. So he dropped everything, and we're just, guys, literally, he just ran and put this together.
So let me give him phase 2, Larry, of what you want to watch for, okay?
Yes, and then I want to briefly cover AMC and then SOUN. I know we're going to keep this one short, but go ahead.
We're going to get it. So here's what happens, right? This is an exciting moment for the shorters, right? People that know that Wall Street doesn't love this company. Warren Buffett, this does not fit Warren Buffett's profile as an investment grade stock. I went over Warren's alpha for picking stocks in one of my recent videos, and it doesn't fit that profile of constantly increasing profit margins. It's just not fitting into that window. And so what that means is the sharks are going to circle around the liquidity that just got poured into GME, looking for the right opportunity to bite. Now, if they get in too early, then this thing can create another short squeeze and push it higher, right? What you want to see, and I'm telling you guys through years of experience, this will be 100% accurate. You want to first see a closed candle on a reasonably higher time frame. A day would actually work. A week would be better. A month would be best. Once you see a closed candle with a rejection wick, once that closes up, you could then take a risk position to the downside. But right now, we've got a green candle with a modest wick, which means that the fire may not be over on GME. So I just want to leave you guys with that. Now let's take a minute real quick and talk about AMC. Somebody said, Larry made, go ahead, Larry.
Before you say that, I want to show this too. This is to bag up what Josh was just saying. All right, let me move this over. As you can see, this is GameStop, right? Josh.
Yes.
Can you read the PE from there?
Yes. Well, no, let me see. Go ahead and read it to me, Larry. It's a little small.
It's $1,372.
Wow.
So, what I'm telling you guys on the fundamental side is this is not an investment. This is a movement. That's why it's a meme stock. I'm not going to tell you to buy. I'm not going to tell you to hold. I'm not going to tell you to sell. The PE, price to earnings, is $1,372. That's all I'm going to say. Go ahead.
Yeah,
Take it from
and
there, Joe.
well, let me just. Yeah, I want to expound on what Larry's saying. Is he's talking about the fundamentals, and he's talking about the metrics that are used to measure the investability of this asset. And what he's telling you is that they don't make sense. They're exaggerated. They're ridiculous. It's Looney Towns. Now, I'm going to pull in a comment here from Monsieur Gadois. Can I find
Say that again, Josh.
I can't. He said, can we just agree that all these technicals don't matter? You crazy coming up on my page saying technicals don't matter. The
Well,
price,
somebody should have warned you.
you
Don't
somebody
say that on Josh's
better show some
page.
respect. Price is truth, my friends. Now, I'm going to add a slight degree of credibility to what I think he's trying to say. Is that
Yeah.
the market, right? You're not proactive with the market. Charting is not proactive, it's reactive. And if you are listening carefully to me, what I'm telling you is to be careful. Let the market show you what it's going to do. Because here's something we can all agree on, Mr. Monsieur. Okay? We can agree that after this spiked up and went up 1,000%, at some point, the trend was very obviously down for a long time. Okay, so that's why we run technicals. We don't know whether it's going to drop today to the floor or whether it's going to shoot to 100 tomorrow. We don't know that, but we can get a pretty clear picture of direction within some period of time. Last time, it was within 30 days. The direction was then set for the following year. And what I'm suggesting is trade the direction that gets set for the following year, especially if you're a little bit more savvy as a longer term investor than an intraday investor. So that's the main point. All right. Thank you. Yeah, go ahead.
I want to do one more thing. So this was this morning. This is a new tab in the Patreon. It's called Market Mondays, right? I posted this for GME. An hour before opening bell, and it was up 40%, Josh, GME. And then it ran up, after I posted this, it ran up a total of 110%. So even if I got in when I posted this, and Josh, GameStop was up only like 10% when I posted this. I'm sorry, AMC was up 10% when I posted this. The reason I'm saying that is for those of you that are in the Patreon, I want you, the morning markets is a new tab that we created to get you guys ready for the week. Anything that's hot, right?
Yep.
And a
And
couple
you
of
were
people
on it,
took
Larry.
advantage of this.
Sometimes the most profitable moment in the market is on Mondays. That's why Larry he's the momentum trader out of the group. I think he's one of the best at it. It's why he's leading up Momentum Mondays in the Stock Squad Patreon. If you guys don't know what that is, it's the Discord where me, Stockmo, Keenan Grace, and Larry are providing plays. Now, what he's shouting out is that he notified this jump early this morning and presented it as an opportunity. Okay, someone asked me the question. They're looking for SoundHound AI. They're looking for those technicals. So I'm going to come back to AMC. Be at peace, folks. And someone said, is Sound AI a meme stock? Now, I want to make this point for those who are really trying to learn to trade and those who are active traders. It is not a meme stock, but what it does have in common with GME and AMC is that it's not profitable and it doesn't have the right profit margin and it doesn't have the fundamentals that Wall Street would consider investable, right? When you hear about BlackRock or State Street being an investor in SoundHound, and I talked about that on my show when this was a $3 stock before it ran up to $10. That doesn't really mean anything, okay? Those guys take positions in everything because they've got their hooks in everything and they're looking down the road for something when it jumps, then they're going to come in and they're going to be like, hey, we were with you guys in the beginning. Now we're going to get a bigger piece of this company. So it's just a starter position that they take. SoundHound doesn't have the fundamentals that a long-term investment account should have, that it would be worthy of you guys to hold in your portfolio. It is a very risky play. Go ahead, Larry.
I'm glad you said that. So could you pin this comment? Someone said, we're here to help you guys. I literally, Mr. Gorilla, Alf a Gorilla.
I'll get there. Go ahead.
I want you to post this comment. So, and yes, on my video, I made a video this morning, and I said, this is for pro traders. And I stand behind what I said. 80% of the people lost money. They didn't make money, they lost money. If you, and who are we mostly talking to, Josh? We're not mostly talking to pro traders. Every time this happens, people go, why didn't you tell me? Why didn't you tell me? Why did you tell me? So I'm going to tell you right now, I'm always going to try to protect the masses. And I said in my video, I said, I'm not telling you to buy or not to buy. I'm telling you, don't have FOMO because it's going to get you burned. If you are a novice trader, I said, the ones that are making money, that have zero time, their options are right now. And these are people, the people that made money, Josh, were the people in the forum that got together to do this last night.
Yep.
You know, those are the true people that made the money. And I just want to be clear, okay? Because a lot of people lost a lot of money. So when you have people like Melvin Capital and all of those guys that lost billions of dollars, you got to understand how things are shifted and who actually makes money, who actually loses money. Let me show this right quick, and then
yeah, go ahead, Larry.
So here's the deal. Look at this: 8 hedge funds. You see this? 8 hedge funds. Let me bring it over. 8 hedge funds lost money betting against GameStop. Stop. You best believe they're coming back for their money, right? And Melvin Capital, all of these. And let's see here. I had another one. Here's, for those of you that want to know, the movie was called Dumb Money. Now, in the movie, Josh, a lot of stuff wasn't correct, wasn't factual. But if you really want to know what's going on, you need to watch it, because at the end of the day, Josh, you remember the movie. All of these people lost money because they were holding. They got caught up in the hype. They got caught up in, he's our God. They started treating this dude like a God, right? And tell us what to do, leader. And a lot of people lost a lot of money. So Josh and I called Josh, if we can help people understand, make decisions for themselves, and see the whole picture. That's the only reason why we're doing this.
I want to get a couple things out, because this is going to be a shorter video. Ostino, we're going to get to SoundHound next, and we will get to AMC. Someone made a comment about the kitty. Someone needs to make a kitty crypto. And I'm telling you, that's exactly the way that they pop. Something hits the news, someone throws out a crypto, another 40 million gets pumped into that. Ostino Finance.
Tell them to get their camera ready. Get your camera ready.
Exactly. Ostino financing. Tesla opened and closed above 170. Please, can we long now? I'm going to say no. Right. I see the potential for it to wick. So we got this one wick to 175, and I put in my chart that we can get another wick to 177. I don't believe we can. I am taking the rips, the small rips up, 175, 177, which I'm predicting. I'm taking those puts to the downside. I could go into great depth in the chart, but whenever Bitcoin has made a floor, it's done exactly what it recently did. So it comes down, makes a new low, a new local 52-week low. It then rocket ships up because there's all these people that love it and are waiting for a reversal. And then it comes nearly back down to that same price it had been. It does that in a 2-month window. Go look into it. every single time it's had a true reversal, it's had a huge candle at the bottom of a move in a monthly time frame, and then a following candle giving a very similar low but making a higher low with as much volume, and that typically is the true reversal moment. Now, I've been saying this. I've been telling you guys that we wanted to get in at 140. I predicted that would be the reversal. It was. It went all the way up to 200, right? And I told you guys that we had to at least get back to 160 before going higher. Now, there's the chance it could go lower than that. I'm just holding on to the 160 number. When we get there, we want to see it pump, and we want to get two beautiful candles right next to each other with a lot of buying tail to them. And so I'm only shorting the rips on Tesla right now. Now, I want to be clear. I'm way bullish overall on Tesla this year, that we're going to end up between 220 and 240 minimum. There's even the possibility of a higher number. So I'm bullish on Tesla, but I don't believe that we've properly made a floor based on our past pattern with Tesla. So you know what? If you do go with calls, you could make money if it goes back to 177, which is what I'm predicting. But just be careful you don't get greedy, and be aware of what I'm doing. If it blasts past 177 and closes above 180, well, then I would say that that's your stop loss on any shorts. And that it could be going higher. But personally, I am shorting the rips on Tesla, but I'm long on the shares right now. Okay, game. Go ahead, Larry.
So before you sign off, I wanted to do a recap. A lot of people are just signing on.
Well, we're going to go
Josh and I,
through
we want
Sound,
you to
Larry. We're going to go through Sound, and we're going to go
Yes.
through AMC.
Okay, I thought. Okay. When you do AMC, I want you to pull up volume, Josh, because here's why. Market has closed since we've been on, right? So I'm just watching things. You know how I move. So the market is closed since we have been on, right?
Mm-hmm.
And as you can see, Josh, in the after hours, it's up another 20%. AMC is, right? So why don't we just go AMC and then Sound at this point? Because whatever you got up.
I'm flexible. I'm flexible. Let's go. We can do that.
Let's cover AMC.
So
here's why I want you to pull up volume 2. So we closed the day up 78.35%. In the after hours, it's up another 25.58%. And so you could just take it from there.
Yeah, well, okay, we'll cover AMC. We've got time. These are going to be good technicals here. I'm going to start off by just saying that on Larry's page 2 years ago, when I got into YouTube, I started my charting journey for you guys, cutting my teeth on AMC. I've never made an incorrect prediction on AMC, and I had two very famous predictions on AMC. One, when we had hit a strong low, and it was about a week out before it had gone from $10 to $29, and I literally said we're gonna get to around $29.50, and it's gonna collapse, and it's not gonna return to that price for a very long time. I said we're gonna hit 19, we're gonna vacillate there for 3 days, we're gonna run up to 29, get rejected, end at around 20, and then collapse from there. It exactly happened that way. And then the last time I covered AMC on my page, I predicted that we were going to have another very short squeeze. And what it did is it did the majority of the move pre-market. It then held that move during the day, and it did the remainder of the move after market and collapsed. And I told everybody, I said, you will not see AMC again at this price for a long time. And I said it'll hit 850. I think it hit like 865 or 875. Within 20 cents, I called the exact top. And then from that point, it's been on complete decay. Now, right when it capitulated at $5, I came on, I said, guys, just to help you, I'm never going to cover AMC again because this thing is on the downtrend. Now, today I'm going to make an exception. I'm going to go into the AMC chart. We're going to look at what exactly that looks at. Larry, talk to the family while I'm pulling that up.
Okay, while you pulling that up, I'm gonna go. I'm trying to put up a ghetto chart right here because I want to show the people exactly what I'm talking
Well,
about
I've
here.
got my
All right.
chart up.
So, oh, okay. You just go ahead, but then I want to
All
pull.
right, guys, we're
Oh,
gonna
you know
keep it.
what, Josh? I'm sorry. There's a lag
I'll
in the
let you. I'll
sound. You
let you.
just go
I'll
ahead.
let you finish up, Larry. All right, guys. I'm gonna
Okay.
keep it. I'm gonna keep it super simple. Now, there's been dilution of these shares, and so what is currently $3 to $5 is not what used to be $5. Just so you know, what used to be $5 was this 41 to $45 price. This smiley face and this arrow was put on this chart by me before this happened. I put it on this green candle right here. Okay. And this was right around this was that $5 to $8 call I just told you guys about. Now, currently, because of the way in which they've diluted shares, this is looking at like $41, and now this is the new $3 to $5. Let me just make it simple, guys. Structural resistance, right? There's two of them. There's one here at what is $11 and realize that that's not what $11 was a year ago. So there's one structural resistance there. And I'd be surprised if we got there. And there's another one right here at $7 and we'll call it $7.50. It would not at all shock me, and I would think it very quite reasonable that tomorrow morning we'll open up at somewhere between 750, somewhere right above this number. I would then imagine that this would get rejected. The absolute top for this, and I can't be more clear, the absolute top for this is going to be around this $12. So if this went bullish from here, we're going to end up with a candle that opens tomorrow above 760. We could then get a wick all the way to $10, and that would then fail intraday, and we would close back beneath 761 and continue the trend down. That's what I see at the moment. Larry, I'm going to have you give a
Yeah.
thought. I'm going to wrap up a thought
I
on AMC.
Sure. I want to show the people this, if you could pull me up. I want to show the people this. Josh, here's what's interesting. And I noticed this last time, and this is how I made money. Remember, I called you in 2021. I made money on them both because AMC followed the exact same pattern that GameStop did, just like before. Josh, so here we go. It ran all the way up, as we could see. It ran up, spiked all the way up. We're talking about AMC, all the way up to the $400 mark, right? So 400-ish, right? Then we had the sell-off. So we thought the party was over. You see, it's the exact same thing that GameStop did, right? But then there's always a second leg that comes up again. And this is exactly what happened with GameStop. But GameStop's was closer in time frame, right? So we had a big run up. So you're talking about from $151 all the way to $284. The first time it ran all the way up to $396. Now here's what happened, Josh. A lot of people were still shorting down here. And that's what I wanted them to be careful of. Like these things have these double tops where it goes boom and then boom. So knowing that GameStop had this pattern, for those of you that saw me make this money in 2021, this is what I did. I did it with GameStop. I was buying in the pre-markets. A lot of this movement is in the pre-markets, but I knew that AMC was kind of following the same pattern as GameStop. So when that second leg went up, I actually wound up shorting, all right? Because I saw that it went up, came down, went up, and then came down. Now, for those of you that see that chart, you know it looks very similar to what? Bitcoin, right? And what's odd is the people that buy meme stock actually also buy meme coins. I'm gonna end it with that.
Well, and I don't want to get it. I want to address a couple things and get into SoundHound.
Yep.
But Larry, if you recall, there was an interesting timing to the meme stocks popping off and crypto popping off last
Yes.
cycle, and it's
That's what I'm telling you.
yeah, it's extremely interesting that we're seeing this pop in the meme stocks because it's telling. I'm only responding to these comments because I want people to just have a better view. Ali Kermani, I'm coming for you. TA doesn't matter with these two stocks. Now, I'm going to repeat what I said a moment ago. There's a degree of truth in that. When TA always matters, because I guarantee you that if I pull up the Fibonacci, the candles, even on the upswing, hit and stopped at every single fib level before it went higher. I guarantee you of that. So TA always matters. It may not be the TA that you know, okay? It may not be that TA. In this environment, you're right. It's like a crazy frenzy of buyers that's going to push the stock up. But you have to understand that TA does account for that. And TA accounts for momentum with the RSI and the stochastic. And I'm not saying this because it bothers me. I'm saying this because I want you guys to have a better understanding that that Wall Street's algorithmic trading devices are absolutely using TA to buy, sell, and manipulate. All right, let's get into SoundHound real quick.
Wow.
All right, guys, let me take you into that chart.
You see why I don't like covering these stocks, Josh? People are so emotional. But here's why you get in the charts. Here's why, the reason why I brought this up, good people, whether you love them, you hate them, whether you're part of the army, is I believe that there will be a time to short them. Both charts will show you at some point on GameStop and AMC, there was a time to short, but there was also time to go long. Now, for those of you that are doing this for the movement and you just want to buy and hold, I did it. I had a lot of money in AMC because I agreed with the movement, right? I didn't like what Melvin Capital was doing. I didn't like what Ken Griffith was doing with the naked shorts. I didn't like it. It's unfair. So I rode with the movement and put a lot of money in and lost some money with AMC. But you know what? I only put in the amount of money that I was, wasn't going to put me in a poll house. And I'm just looking at you guys and being straight. Let me know when you're ready, Josh.
Okay. All right. Let me just go over this.
Go ahead.
All right. So we're looking at SoundHound. And this is what I want you guys to notice. And I want you to respect it, okay? These candles, I'm looking at a big time frame, the monthly time frame. And if we look at the two bearish candles on this chart,
pull it up, Josh. Pull it up. It's not up.
Well, I'm trying to show people this top of this wick real quick. And I'll pull it up. Okay, do you guys see that?
No, we don't. That's what I'm saying.
All right, give me a second. Let me see what oh, nobody, I'm just looking at myself. Everybody's looking at me.
That's
all right.
what I'm saying.
Thank you. Thank you, Larry, for saving me. Okay, all right.
You know they're gonna still get on my case for interrupting, but go ahead.
No, I moved the chart down when you said pull it up. Okay, so I'm trying to point out the two most bearish candles on this chart is this candle here that I just highlighted and this candle here that we just had this incredible move up to $10, okay? After that, you can see that many months the candle, it came down dramatically, moved sideways, went lower before it could begin to go back up. This was a really strong move up. And, I was selling heavily my position between $9 and $10. And I was telling, actually, I began to sell my position. I actually began to sell at $6.50. I bought more at $7 and I unwound from $7 all the way to $9. And I was completely out between $9 and $10. And we got this very bearish candle, which has not been fully met. It's not been fully processed yet. I'm going to tell you guys that the median price move, which also aligns with structure, is $4.60. And so we are going to, we've come up to touch this $6. All right, so we've come up, we back tested. This was a structural area. Now, do you guys see that it was a structural area? Back here, it was structural. So we came beneath it. We came down to 350. I called this a buy on the day that it was 350 in the Patreon, right? Since then, it's moved all the way up to $6. Not a complete 100% gain, but a beautiful gain right there. Now, it is my view, that it is quite unlikely that we're going to continue on into this space. More realistically, we're going to come back to around $4.60. And I'm pointing out to you guys, let me see if I can get this clear. This is structure, right? This is going to interact with structure, right? And so we've come up here against this previous structure, and we've gotten a little wick. We got to watch this over the next couple days. If it continues to come down, I'm telling you that it is very, very, very likely, plausible, feasible that it's going to hit 460. So I just wanted you guys to be aware of that. This was the move that I saw it doing when it hit $3.50. I saw it coming back and testing this area of $6. Now I will change my view if we open a weekly candle above $6. If we open a candle above $6 and we hold it through the week, then I would say, hey, maybe we're heading back to $10. At the moment, that is not my view. I think we'll interact with this $6 level perhaps again, but ultimately in the course of the next 30 days, I see the price average smoothing out at around $4.60. All right.
Cool.
So that pretty much covered it. Let me see what I'm going to take a minute and talk to the fam here about what they want to talk about. So AMC did a 1-to-10 reverse split on August 24th, correct? And that's one of the reasons why it looks like the old price of $40, which actually was $5, around $4 at the time. That's why that looks like $40 now. So this thing has been annihilated. I mean, it's gone. If this was kept at the previous ratio of shares, we'd be down at 2 pennies, 3 pennies. We'd be down low, 10 cents, 40 cents probably. 40 cents is what it would be at. And now we've made a significant move back up, ready for puts. And I'm going to just remind you about the puts would be too early. The people that are impatient and pile up going short or getting puts on any of these plays are likely going to get burnt, because as the other guys that have been contesting the accuracy of TA they're saying that it's a frenzy and can continue higher. I'm saying the same thing. Wait until this whole frenzy cools off and it goes back to a down pattern. That's when you want to consider shorting. If you pile into a short now because you think you think you can catch it, you're going to get annihilated, because GME and AMC, from my view of the technicals, still look like they're going to do some pumping tomorrow. It's going to be volatile, but I would still say they look like they're going to do some pumping tomorrow.
If you rewind this, both GME and GameStop, I'm sorry, same stock, AMC and GME, both did the same thing. They pumped the second day also. It was the third day that tripped people out. And I made money on the first one. I made a lot of money on GME, right? So I'm telling you guys what Josh has said is actually right. That's why I called him and scuffled to get this video out, right?
I like
not only. Go ahead.
No, I'm good, Larry. I'm with you. I'll pick it up.
Josh, bruh, can you please stop interrupting me? Can a brother catch a break? I can't even say that with a straight face. But anyway,
we get that comment, guys, on this page a lot. But a lot. So big wick energy, go with the trend. There's a lot of wisdom with that. Go with the trend until the trend becomes established over time, which will be clearly seen in the technicals, and then you can follow that nicely to a road of profit. Whenever this passes, this AMC and GME pump, whenever it passes, it's going to have a strong spike up. It's going to give you a rejection candle, and then it's going to have months and months and months of a downturn. Just keep that in mind.
Can I say something?
Go for it.
You don't even have to be good in technicals to go back and see. Just go back to that area that I showed you, right? Look at this. For those of you that just tuned in, please rewind this whole video, watch it. Watch the video that I put on my page today, Stock Up with Larry Jones. I want you to watch both videos and then make your own decision what you want to do. But I can promise you this, you'll be much more well-informed after watching both of the videos, because clearly you will see the second day was not the day to short any of these, really. Now, it could be this time, but it wasn't in the past, right? And this happened both run-ups. Remember, AMC did multiple run-ups. If I can go back in the chart, it did multiple run-ups, and it did the same thing. It followed the same pattern. So I 1,000% agree with Josh. Got to be careful and not to be short anxious also.
All right, guys, I'm going to leave it there. I gave you what I promised to give you. I've got a great video coming up, a deep dive of the technicals on Palantir that I think a lot of you are going to want to hear, because I think there's a very interesting story. The $20 price point is super critical. And I think we're going to come down and touch that 1975. And there's a couple very important trend lines that are intersecting, and it's going to tell the story for the days ahead. Plus, I'm covering in this video an altcoin that I have been bullish on in times gone by, over a year ago. And it gave us a payday, and I called a sell price on it. But this will be the first time that I've come out, and it's a legacy coin. It's the first time I've come out and given it the rating of sell. So I know you guys are going to want to hear that. In general, I am bullish overall right now on crypto and the altcoins. I believe that they're down on their lows, and I think the liquidity is up ahead, up top. I think Bitcoin's going to move there before it goes lower. And then we're going to see, once it gets to 68, whether it is a new lower high, or whether we're going to go and actually test the high of 74. I think that's actually on the table. But I do believe that even though that sounds bullish, and it is bullish, that in the grand scheme of things, as you're looking at the chart, we've largely just been moving sideways, and that's all that is over the last 60 days. Larry, final thoughts before we head out.
Hey, man, we covered it all. Listen, Josh, let me tell you guys. I called Josh. I was like, we got to cover this right now. We got to save the people or help the people make money, blah, 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 blah. And Josh scrambled. And you guys know how Josh is with setting these lives up. But Josh, you made me proud. Josh scrambled and got this thing up so quick.
Got that thumbnail.
Mind-blowing. And got that thumbnail made too. We really care about you guys. That's all we want to say. We just want you guys to make wise decisions. Love you guys.
Shout out to Kathy Schumann, who is always...
Hey, cousin Kathy.
We love Kathy. Love all of you guys. Hit that subscribe button for those next videos on alts and Palantir. You're not going to want to miss it. All right. Peace and blessings. Take care.
Peace.